The Rebel Capitalist Show.
Let's start with the Aussie housing market. Every single time I talk to you, it seems it gets crazier and crazier and crazier.
Yeah, it's really amazing. Look, I'll just give you a few indicators of what's happened recently. I mean, the top level news is that despite all the spin and the hype and all of the mainstream media talking out auction rates are really high and everything, the truth is the market is still relatively on the decline. Prices are sliding in some areas, sliding sideways in others, and going up in just a few areas. But what really is interesting is how the government and the Reserve Bank and our regulators are backing the housing market as the growth engine once again to take us out of the economic slowdown from COVID, which of course was happening already. So I keep saying that the virus was a catalyst for something which was already there. So on Friday of last week, the Treasurer announced that as at next March, they're planning to take away what are called the responsible lending rules. Now, responsible lending was brought in after the global financial crisis in Australia because there was a sense that there was an unequal relationship between borrowers and lenders, and that lenders basically were able to throw loans at people and they just sort of gobbled them up, right, without any real accountability. And of course, we had a Royal Commission into the financial sector 2 or 3 years ago, and the Royal Commission shone a spotlight on poor behavior in the financial system around mortgages. So mortgage brokers were fiddling with applications, encouraging applicants to lie. The banks were actually throwing out loans they should never have thrown out. And during that process and after that process, lending momentum eased and property price growth eased, right? And then slowly it's been turning up. And now we've got the situation where that core protection from a consumer perspective is just being taken away. March next year is the proposed. Now, the argument from the government is, one, the financial regulator on financial stability has now put more pressure on the banks in terms of portfolio management of their mortgage portfolio. So the risk management processes should be stronger, right? Two, this was all red tape. It was unnecessary. All of this validation of incomes and all those things was unnecessary. And three, it swung the pendulum completely back to the consumer. In other words, if the consumer makes a declaration about their income or makes a declaration about their ability to be able to service the loan, the bank can just take it. They don't have to do any more due diligence, right? This is a remarkable turnaround, and this is yet another signal that the markets here are not logical at all, right? That basically they want to use the housing sector and more debt to try and pull the economy out of the deep doo-doo it's in. And remember, of course, that we've got some of the highest debt to income ratios in the world. Yeah. We've got a third of the population leveraged to the gills, and the mortgage stress numbers that I look at are as high as they've ever been. So it's not like we're starting from a nice, clean starting point. So this is another example of short-termism, housing market, and of course, over the weekend, all of those property portals in Australia then were actually saying, hey, whoopee, the market's going to come back and everyone's going to be, absolutely buoyant about the property. No, actually, it's not like that. And I'll tell you a bit more about that. But look, that's just the sort of the headline big change that happened literally last Friday.
But are the banks keeping these loans on their books, or are they selling them?
Some are at the margin securitizing them, but mostly they are kept on the books. And the default rates have been very low. So in Australia, a typical default rate 90-day is well under 1%, and it's only upticked very slightly. And of course, the banks then say, well, there's nothing to see here. Now,
that's the pushback.
Yeah, but the point is, we have full recourse here in Australia, right? And that's really important to understand. So if you actually take a loan and later you have difficulty with that loan and you want to unwind it, as it were, even if you sell the property, repay the bank, and you still owe money at the end of it, that loan stays with you. So that balance stays with you. So it's full recourse, right? And that's something that people have missed in some of these conversations. Comparing it, for example, in some areas of the US where you can just hand the keys back and say cheers, right? Can't do that here, right? The loan stays with you. And the other point to make is that if you look at the distribution of the credit, right? Like I said, it's 1/3 of the population who are basically mortgage holders. It's not equally spread. There are a lot of people with reasonable mortgages and frankly not too many issues. Okay, unemployment's getting higher. There are risks there, but there's another group, what I call the marginal borrowers, who are borrowing to the gills, have essentially very little ability to be able to handle any additional financial crises. And these are the people who are seeing their incomes dissipating thanks to the latest issues with regard to the economy. And they're cutting back on their spending and trying to make things meet. But because of the way that this all runs in Australia and the underlying conviction that property can only ever go up, which is still there, wired into consumer land, right? People hang on and hang on and hang on by their fingertips, hoping that things are going to magically turn around. And that's where I think we're going to find it difficult down the track. So the banks are fine, I think. The government can say, well, we can just throw more money at this and lift house prices again and get more debt. But the marginal borrower is the one I'm concerned about.
Do you guys do the cash out refis there?
Yeah, they can refinance, and there's a big bounce on refinancing recently because, of course, rates came down quite significantly. So that that you can get a mortgage for 2 something now, 2 point something, whereas it used to be 3 or 4. And a lot of fixed rate deals are very, very cheap at the moment because of the fact that the Reserve Bank is controlling the yield curve, and as a result of that, the actual rate that you pay is quite low. A lot of people, though, when they refinance, used to pull equity out as well. And we saw that over the last 10 to 15 years, particularly strong because, of course, equity was expanding. Even now, some of the refinancing that is going on is still pulling equity out, right? And that's one of the reasons why the total value of loans made in Australia is rising. The other one, of course, is that about 15% of mortgages at the moment have a deferred principal and interest repayment. This was brought in because of the issues with regard to COVID. And what that means is that they aren't making any payments at all at the moment, right? And that's been going on for about 6 months. And so the value to the banks of those mortgages is rising because they're capitalizing the interest, right? And now the banks are starting to have to speak to each of these borrowers and say, can you please start repaying? And interestingly, one of the banks said the other day that 1 in 5 of people on deferred mortgages haven't picked up the phone when the bank's called. They're ghosting the bank, right? They don't want to talk about starting to remake their payments. And interestingly, if you look at the analysis there's about 1/4 of people who will be able to start, probably no issues. Another 1/4 at the other end of the spectrum who just have got no job now, so no income. So they've got a major issue, right? And 50% in the middle who will be able to do something. Maybe they'll be switched to an interest-only loan or something like that, which, by the way, has its own situation. But here's the thing. The regulators basically have shifted that goalpost out now to say, well, you can go on forgiving repayments up until, let's say, March next year, right? Originally, it was 6 months. Now it's a lot longer. And secondly, those loans are not classified as bad loans, right? So from
on the balance sheet.
On the balance sheet, right? Yeah, so they can just be classified as normal loans. And every time you have a reset event with the client, that puts the loan back to normal status again. So basically, this is what I call the extend and pretend situation that we're in. And by the way, 19% of SMEs who are borrowing are also on deferred repayments at the moment. So, this is a really, really big sleeping issue. And, the banks have actually started lifting their provisions because they do expect more bad debts ahead. And of course, if the loans are actually provided for by way of bad loans, then suddenly the amount of capital the banks have to hold goes through the roof. So the regulators don't want that. The banks don't want that. So they're sort of, extending and pretending, hoping that things will magically work. So we're in this amazing situation where we've got a pool of people who are deferred on their mortgages. We've got rising unemployment at 10%, by the end of the year, the RBA says 7% 2 years later, which is much higher than it used to be. And that's the real number in the official figures. The real number, the unofficial figures, is probably close to 15%. And we got all of these other things that are going on below the waterline to try and protect the banking system. Final point, the Reserve Bank has been providing liquidity directly to the banks. So they've been controlling the interest rate by doing that. So there's a flow there. And now the Reserve Bank has also said that they're going to encourage, quote unquote, the banks to start buying state bonds and government bonds to be able to actually further enhance the liquidity of the banks, right? And the question I have is, well, all that enhanced liquidity, is it going to go anywhere? Because if people are actually under the pressures that we think they're under, they may not be able to afford it. So we've got this magic money machine called the housing sector, right? And they're just throwing more and more fuel on the flames at the moment. And I'm just amazed at where we're going.